Whenever there are two camps of traders holding either bullish or bearish view at the same time with similar transactional size, they strike an equilibrium and it creates a range that we are seeing here in a crude oil. In price behavior concept, I would term this as a tug-of-war price behavior between the buyers and the sellers. In such a competition, either side ultimately will claim its victory, and especially when it crosses beyond a certain point. When that happened, the market main trend that was unsure just right before, it will suddenly became clear who is taking the lead. Why the crude oil is currently having this tug of war behavior, and who will subsequently take the lead. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. So, why this tug of war behavior? It is because one camp hopes that the crude oil prices will normalize to the pre-energy crisis level, while the other finds that the energy crisis may persist on. Consequently, this scenario has left investors split into two camps with opposing views on the primary direction of crude oil or the main trend. They are currently tussling over both sides, buy and sell along this timeline, and therefore is forming this range right now. So if there is no clarity on the situation on this energy crisis that was started on the 28th of Feb, this range will likely be continued. But this range may also get narrower as both camps continue in their price negotiation with similar weighting in terms of their sizes. And at the end of the range, it will be the fundamental development that causes the market to break out either side, breaking either above or below this breaking point. When did crude oil started entering into this range? It was on the 9th of March. And that was 6 trading days after the start of this energy crisis. That's the start. And if you count 6 trading days, slightly more than a week, and that was a peak, then we enter into a range. And let's take a look at our discussion on our weekly case study. And that was on the 9th of March, we saw an inverted hammer. So we did discuss about that as well. And the high was at 119.48. And let's take a look at the high on the trading view here, 119.48. So then our discussion was, let's look at the discussion again. I suggest that buy on dips with risk or stop loss below the income stage. Could 10th of March, which is this low here, just the next day on the 10th of March, that was on at the 76.93, the completion of the dip. So I suspect that in such a volatile period, up and down, is very wide, 100 and almost 120 to about 76. Usually at the end of it, there was a period of range. So all these significant highs that we're seeing here, the high and the lows are going to be very useful if it's going to range, which is right now. I would take it so useful as a reference point to determine the upcoming range, which is right now. So notice that each latest high and low, or each latest high, it is lower than the previous, and each latest low, it is higher than the previous, and therefore it is forming a wedge right now. And the recent significant high was at 110, and the significant low was at 78 US dollars. And if there is no clarity on any breakthrough fundamentally on this energy crisis, I believe crude oil for the time being should continue within this price range between about 110 and 79 US dollars. And it may get tighter or narrower along this timeline. So the strategy is to sell into strength and buy into dips within this band for the time being. Ultimately, will crude oil break above or below this range and start its main trend towards the north or the south? I will avoid any prediction on its fundamental outcome on this energy crisis. it is beyond us to make those calls. But on its technical studies, and let's look at the technical studies here, and based on the crude oil that we have discussed in the previous weeks, we could see that what we covered quite a bit in our previous tutorial here is that on this particular one, we saw that on this long-term chart on the what a yearly chart. The title was crude oil price target of $140. How do I derive that? On this yearly chart, we could see a parallel uptrend line. That over time, inflation is always on the up move. We could see that most commodities are having this parallel uptrend line. It's not just on the crude oil, but crude oil is pretty obvious, but many other commodities as well. On this particular day, on 15th of April, I posted on this quarterly chart that seems to be there's this cup and handle formation, and every quarter I'll be waiting for it to close. This coming quarter, it's going to take another 3 weeks for it to close. If anytime it's going to close above this neckline, and to me it's quite clear technically, the cup and handle formation may be on the way up. If June failed to close above this neckline, maybe we're looking at a quarterly chart, it will be for September. So of course, the latest long-term study on the crude oil is that I believe that if you're looking into the 70s and current, there's this medium line, medium price at $17. That was in the past, but currently the medium line over the last few decades was at 50 US dollars, and it seems like the prices are moving into level and stages. Means that each new stage as it passed those levels that would be in the past, that we don't see the crude oil coming back down to $17. Of course, this is a very unique situation because of the COVID storage crisis. But moving forward, if there's a break above, we may be seeing that there's a new medium line here. So what is our take of this tug of war reach the end of the tunnel? If you find what I just shared is useful, please save it and share it to yourself or your friends. My name is Kon Hao. I enjoy studying how different markets currently behave to uncover emerging trends, the potential trending market of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that I stayed through this tutorial. You have many great trading weeks ahead.